Welcome to Illuminati Silver. We tell you the truth about silver. Today is Thursday, the 12th of November 2020, and we're reporting the job figures announced today and what they might suggest for equities, the economy, and precious metal prices moving forward. So, let's take a look. Now, in yesterday's video entitled Gold and Silver Midweek Financial Update, 11th of November, for which we place a link in the description box below, we pointed out that today the US would be reporting on weekly jobless claims plus the Consumer Price Index. It's especially, though, the issue of jobs we wish to refer to now, and we shall explain why. In a moment or two, we shall read what Reuters published less than an hour ago, but this is the issue. Recent job reports and jobless claims are showing an improving picture, certainly as far as the US is concerned. But it appears to be improving at a consistently slower rate. This is proving concerning because as we enter into the winter months, we're seeing considerable rises in US coronavirus cases and hospitalisations and deaths. Yesterday alone showed the US reporting nearly 143,000 new cases in a day and 1,479 deaths. The figures were very similar the day before. And whilst this admittedly is not only a United States problem, the US is one of the worst countries affected. The new Biden team are mooting the idea of a 4-week lockdown should they gain power in January, and we're already seeing state governors introducing new restrictions literally as we speak. Now all of this will serve only to create more unemployment as opposed to just slowing down employment growth. And it is here in this detail that we have to be careful and cautious, and for those of us investing, aware. So let's take a look at what Reuters have just had to say on the matter. Reuters article dated 12th of November 2020, updated at 1700 hours GMT. US labour market gradually healing. Inflation remains tame. The number of Americans filing new claims for unemployment benefits fell to a 7-month low last week, but the pace of decline has slowed, and further improvement could be limited by a raging COVID-19 pandemic and lack of additional fiscal stimulus. The labour market slack is keeping inflation muted, with other data on Thursday showing consumer prices unchanged in October as moderate gains in the cost of food and rents were offset by cheaper gasoline and healthcare. The frail economy is one of the major challenges President-elect Joe Biden faces when he takes over from President Donald Trump in January. Tepid inflation could allow the Federal Reserve to keep its ultra-easy monetary policy for a long time to aid the recovery from the COVID-19 recession, with the labour market not expected to move back to full employment before 2023. There are not enough jobs and not enough inflation out there to assuage the worries of Fed officials trying to go it alone to engineer this economic recovery, as Washington elected officials dither over providing additional fiscal stimulus, said Chris Rupke, chief economist at MUFG in New York. Initial claims for state unemployment benefits fell by 48,000 to a seasonally adjusted 709,000 for the week ending November the 7th. Data for the prior week was revised to show 6,000 more applications received than previously reported. Economists polled by Reuters had forecast 735,000 applications for the latest week. Despite claims dropping to their lowest since March, they remained above their peak of 665,000 during the 2007-9 Great Recession. Weak demand, especially in the services sector, is forcing employers to shed workers. Layoffs could accelerate as new coronavirus cases explode across the country. Daily new COVID infections are exceeding 100,000 and hospitalisations are surging as cooler weather draws people indoors. prompting some state and local governments to impose new restrictions on businesses. Even without restrictions, many consumers are likely to stay away from places like bars, restaurants and gyms, fearing exposure to the illness. Restaurants and gyms moved outdoors during summer. News about experimental vaccines has been encouraging, though economists caution against too much optimism. The uncontrolled pandemic is a large downside risk to growth in the next few weeks and months, said Bill Adams, senior economist at PNC Financial in Pittsburgh, Pennsylvania. Unadjusted claims viewed by economists as a better measure of layoffs fell 20,799 to 723,105 last week. Including a government-funded program for the self-employed, gig workers and others who do not qualify for the regular state unemployment programs, at least 1 million people filed claims last week. Stocks on Wall Street were mixed as investors kept a wary eye on the coronavirus infections. The dollar slipped against a basket of currencies. US Treasury prices rose. Unemployment claims peaked at a record 6.867 million in March. Much of the improvement in the labour market came from businesses recalling laid-off and furloughed workers, as companies and the unemployed accessed their share of more than $3 trillion in government coronavirus relief. But fiscal stimulus has run out, which will make it harder for the economy to generate enough jobs to absorb the millions of unemployed Americans. The number of people receiving benefits after an initial week of aid declined 436,000 to 6.786 million in the week ending the 31st of October. That partly reflected many people exhausting their 6 months of state benefits. A record 4.143 million people filed for federal government-funded extended unemployment benefits in the week ending October 24, up 159,776 from the prior week. Economists said this figure was understated, as Florida and Georgia had yet to report their figures. These benefits will run out in December. During that period, there were 551,791 people receiving state-extended jobless benefits, which are also capped at 13 weeks. So all told, 21.2 million people were receiving jobless benefits in late October. The government reported last week that non-farm payrolls rose by 638,000 jobs in October, the smallest gain since the jobs recovery started in May. That followed 672,000 jobs added in September. Only 12.1 million of the 22.2 million jobs lost in March and April have been recovered. So I'll quote here just a little over a half. In another report on Thursday, the Labour Department said its consumer price index was unchanged last month following a 0.2% increase in September. A 0.2% rebound in food prices was offset by a 0.5% drop in the cost of gasoline. In the 12 months through October, the CPI climbed 1.2% after increasing 1.4% in September. Excluding the volatile food and energy components, the CPI was also flat in October after rising 0.2% in the prior month. Owner's equivalent rent of primary residence, which is what a homeowner would pay to rent or receive from a renting home, rose 0.2% after ticking up 0.1% in September. That offset a 0.4% decline in the cost of healthcare. So as supply shortages are being resolved, sluggish aggregate demand will keep a lid on inflation, said Kathy Boschankic, chief US financial economist at Oxford Economics in New York. End of article. As you can see from this reporting, there is concern that the recovery may indeed only be short-lived, or at least until a vaccine has been fully introduced. It's certainly going to take a number of years before we return to the same employment levels that we had prior to the virus occurring. Now, yes, admittedly, markets do tend to be more gloomy than is often the case looking forward, but nevertheless, we can see that today, despite, of course, multiple days of growth, equity markets are now down 1% in the US and in Europe. And gold is slowly edging up again at $1,882 and silver at $24.35. Now, moving forward, we don't see an imminent major rise in precious metal prices, certainly not yet, or at least not until a new stimulus package is announced, and that may give them a bounce. But equally, nor can we see a major fall either. Equity markets are very high, but there is still a prospect of one more bull leg left. Though, if mass hospitalisations occur, even that will be avoided. So for the next couple of weeks, we envisage some seesawing of prices within the equity and commodity fields, and sense that there is still more pain to come before real relief is experienced. What do you think? Do share your thoughts. Thank you so much for listening, and if you haven't already done so, please subscribe to our channel, not forgetting to press the bell sign so that you're notified of our videos as and when they are published. We hope you have found this video interesting and informative, and if so, please give it a thumbs up and share it on social media. Please ensure that you have subscribed to our channel and press the bell sign so that you are notified of any future videos. Also, kindly visit our website at illuminatisilver.com, and if you haven't already done so, please subscribe either as a free or paying member for regular email updates and offers. Disclaimer: Illuminati Silver owners come from a background of banking, international wealth management and economics. Having now retired from these worlds, we are not qualified to give investment advice. Therefore, this and other productions must not be deemed to be giving such advice and merely represent the personal views of its owners.